If you watch this video until the end, you'll fully understand the concept of entry confirmation, a powerful method to drastically increase your win rate, avoid unnecessary losses, and massively improve your risk to reward ratio on every single trade. We're not wasting time, everything is shown directly in the chart so you can apply it immediately on your own trading. Let's jump right in. Here's what a typical confirmation-based entry setup looks like. In this case, we're focusing on a bullish scenario. Step 1, identify a downtrend. We need a market that's clearly in a downtrend. That means a sequence of lower highs and lower lows. Textbook definition. Eventually, that structure breaks, we get a change in price behavior. You might call it a break of structure or a change of character. The key here is not just a wick above a previous high. We need a clear candle close that confirms this structural shift. That gives us evidence that momentum is flipping and buyers are stepping in. When this break occurs, we're no longer dealing with lower highs and lower lows. Now we are seeing higher highs and higher lows, a sign the market is turning bullish. Step 2 is wait for the pullback. After the structural break, we don't chase. We wait for price to pull back into a point of interest, typically a fair value gap or an order block, ideally in the discount zone of the range, so below the 50% level. Let me show you a real life example of this on the S&P 500. We start with a clear downtrend, clean lower lows and lower highs. Then the market breaks a previous high with a strong candle close. That's our change of character. Structure shifts from bearish to bullish. Now we wait for price to return into a fair value gap or order block created in the move up, and watch how price respects the fair value gap perfectly, feels it, and then reacts with a bullish follow through. That's your confirmation. We don't guess, we wait for price to come to us. Before entering, always define your target. If you want me to go deeper on target, let me know in the comments. You have two options now. Set a limit order at the fair value gap in advance, or wait for a reaction and then enter manually with a market order. So why we use fair value gaps? Markets tend to revisit and fill inefficiencies, like a fair value gap. So before continuing the move, we expect price to come down into our fair value gap. That's why we wait for price to correct into these areas instead of chasing breakout flags or random patterns. In our example, price tags the fair value gap, then pauses overnight and then rockets into our target the next day. When you see a confirmed break of structure with a candle close, that's your green light to start looking for long setups using fair value gaps and order blocks, because it tells you buyers are in control. But if we only see a wick above the high and then a rejection, that's a sign of weakness or liquidity grab, not a valid break. Often in those cases we get another deep retracement or even a lower low. Here's the beauty of confirmation setups. You can place your stop loss below the swing low or order block, giving you a tight risk and a high reward to risk ratio, oftentimes 2-to-1, 3-to-1s, or even better. Remember, price action alone is not enough. You must always combine it with higher time frame context. First, identify a clear downtrend. Second, wait for a break in structure confirmed by a candle close. Third, wait for a pullback into an fair value gap or order block in the discount zone. 4, enter using a buy limit or a confirmed reaction. And 5, define your target and execute with discipline. Now let's look at a more advanced bearish example on silver. In this trade, the last low wasn't broken yet, but we anticipated a short based on context. In our community, we spotted this in advance. And by the way, you might have noticed that this is the first YouTube video on this channel. So in case you're wondering which community I'm talking about, we've actually been around for a long time in the German-speaking world. And very soon, on July 1st, we're launching our English-speaking community. So you can already join the waiting list, and if you're among the first participants, you'll get free access to the members area. Just click the link below the video, it will take you straight to our community page. And we were bearish for two key reasons. Silver was overvalued against gold based on the silver to gold ratio and based on our online trading hub value index. Our valuation index showed clear historical reactions every time this threshold was hit. So you can go back and verify it yourself. Every time silver became significantly over or undervalued versus gold, we saw sharp reversals. The macro confluence gave us enough reason to enter aggressively after price filled a fair value gap, even without a lower low. Notice how the 4-hour fair value gap aligned with the 1-hour inefficiency. That's where the trade was executed. The target was conservative but hit cleanly, and price even extended into the daily fair value gap, aligning with higher time frame objectives. Lastly, we take a look when the setup fails. Here in the euro versus the US dollar. Not every confirmation works. Let me show you one that didn't and why. Here's the euro versus the US dollar on the 4-hour chart. We had a bullish trend and then price closed below a swing low. That's our usual bearish confirmation. There was even a fair value gap to target, but the trade failed. Why? On the daily time frame, we were reacting off a liquidity sweep to the downside, and the next target was actually a high, not a low. Even more important, our valuation index showed that the euro US dollar was undervalued relative to the euro bonds, meaning a bullish reaction was more likely. So although we had local bearish confirmation at the 4-hour chart, the macro context told a very different story, and that's why we stayed out. This shows that a confirmation entry is powerful, but it must always be paired with context from higher timeframes and fundamental confluence. If you want to master this full framework from macro setup to precise entry, I've linked a link to the online trading hub community below, where you will get to a workshop and a complete free video series. Go check it out and learn how we combine every piece to stack the probabilities in our favor. If this video helped you, please give it a like, leave a comment below if you want the next video to cover trade targets, and subscribe for more smart money content. Good luck with your trading, and I'll see you in the next video.